being joined by Vardhan Patodia, the president of CREDAI, which is an industry body of developers. We will also be joined by Ramesh Nair, the Chief Executive Officer and the Managing Director at Colliers, which is a property consultancy firm, an international property consultancy firm. Gentlemen, thank you so much for joining us live right here on this edition of The Market. So Patodia, I'll begin with you. You have skin in the game. Real developers which have been suffering from trust deficit, which have been suffering from very high inventories, have seen the comeback of the real estate market. Our next panelist, Mr. Nair Colliers, has put out a very interesting report where the maximum price appreciation has taken place in the Delhi-NCR region, where we've also seen inventory levels come down. So I'll begin first with you, Mr. Patodia, saying why so much of the action in the Delhi-NCR market and not maybe in Bengaluru or Mumbai?
Actually, good morning. Good morning, Ramesh. Actually, what is happening, we have to look at different markets and different micro markets in a different perspective, because each market has a different kind of a behavior. As far as Delhi-NCR market is concerned, prices had corrected quite steeply over the last few years in this market. So now what we are seeing is a buoyancy in demand as well as correction of prices which had gone down. And because of basically two reasons. One is buoyant demand because of low interest rates and requirement of housing post-COVID, and also input cost increases. So there has to be some kind of price rise for the developers to kind of survive in this volatile market. Also, what is happening, there's a lot of unsold inventory which was declining in the NCR region because not very many large projects were launched there. And you see the maximum inventory there in Noida, which is about 23% of the total inventory which is there. And what I expect that this will be a very positive trend to continue, because the input costs will start cooling off due to the recent government measures. And if this is so, further price rise is not expected in the short term. And the only kind of red flag is the interest costs which are going to rise, which have already risen and which is likely to increase further in the short term.
So, I live in New Delhi, and Nikunj and Aisha, I wanted to tell you guys also this. Just 2 days ago on WhatsApp groups, it completely went viral. 2 roads down from me, there was a house that was bought for 3.5 crores, one floor, and it was sold 2 days ago for 5 crores. It sounds completely insane when you talk about that kind of price appreciation in such a short time. But Ramesh Nair, we're also staring at inflation. Cement prices are going up, steel prices are going up, home loans are also going to go up. So when you have this kind of asset price appreciation, I think what a lot of people want to know is this a time to enter the market? Is it getting too overheated too fast?
Delhi-NCR has been seeing pickup of sales since Q1 of 2019. And there was also been a big reduction in launches because the industry went through a lot of challenges in NCR. So you started seeing unsold inventory kind of coming down. So that's one of the key reasons why prices have been kind of going up in NCR. We've also seen the reopening of the economy post-pandemic. So there's more walk-ins happening. So sales have again gradually started increasing because of that. And many developers still have been cautious with regards to new launches, because of which the number of under construction is also kind of slowly coming down. So the overall improvement in demand and coupled with increase in input costs, so there is no option for the developer but to increase price. This is what is driving the prices up. We firmly believe if the demand continues to remain upbeat like what we are seeing, and the new supply is aligned to market demand. What we saw a few years back was that massive oversupply in the NCR market, which we are not seeing today. Then I think the prices will witness a healthy upside over the next few quarters.
But I think, Nikunj, like we were discussing earlier, the intriguing thing about realty is, while we knew that this is going to come, right? The cost pressures, the input cost pressures, the labor costs, etc., were bound to push up realty prices higher. But the intriguing thing is that realty, even within a city like Mumbai, is just such a region-to-region specific story. The same trend doesn't apply in Hyderabad to Bangalore to New Delhi to where Nayanthara lives or to where we stay.
No, look at the data. I'm going by data. The data says that the highest appreciation has been in NCR. Hyderabad has seen one of the biggest appreciations. You could ask yourself, is that why Mumbai is not going higher, and why Hyderabad prices now are honestly really nearing the second highest prices after Mumbai. So Harsh, that's my question. Why NCR specifically has seen this appreciation? Is this related to do with some migration, inventory levels, consolidation in the market?
It's some total of everything. See, it is definitely the uptick in demand. Secondly, reduction in unsold inventory. Third thing is fewer launches. Fourth is increase in input costs. You see, what has also happened, if you compare Delhi with the MMR market, is totally different. MMR market has seen a lot of new launches because of the reduction in premium by the government. So all the developers went in for massive new launches in the MMR region, which kind of increased the supply flow in the market. That is why the probably prices have not gone up as much as in MMR. But let me tell you, in MMR also, the luxury segment has seen a massive price increase, which probably Ramesh will also vouch for. And certain areas like Navi Mumbai and western suburbs also seen a price rise of about 10%. And also Hyderabad has seen a massive price increase in the last 6 to 8 quarters. And there has been a favorable demand in flat sales, plot sales, land sales in Hyderabad. It's a place where a lot of deals are happening. I hope I've answered your question.
Ramesh, the same question to you. Anything specific happening in this market? Let's say Hyderabad or NCR.
So I was just looking at the numbers from 2019. It's wrong to kind of look at real estate pricing just from a quarter-on-quarter basis. If you look at if somebody had invested in Hyderabad in Q1 19, they would have seen a 28% increase in prices. So if someone had invested in Delhi, they would have seen a 15% increase, which is a very, very healthy appreciation of prices. What we came out with this in this report, Nikunj, was the average residential prices across India has gone up around 4% just during Q1 2022. And one thing we need to note here is it's been a prolonged slowdown. And that's kind of, it's a clear indicator that the residential market is moving towards recovery. So that's the key point. Second is we also need to note the prices went down a little bit during the first few months of COVID. We remember the bloodbath of 2020. Today, overall, all prices across all the key cities have surpassed the pre-COVID levels of 2019. That's something, again, to cheer about. The other big thing what we're seeing is grade A developers have started increasing their prices in the last 6-8 months. And that's also because they're seeing a lot of demand and there is no option, like I said, because of higher input costs, they have to increase prices. And also all the the major metro cities, we are seeing price increases over the last 1 year. So we've been discussing that Delhi has seen the highest. But almost all the markets are doing reasonably well on that front.
Right. Harsh, to this entire angle, I mean, fair enough that realty prices are going to be on an uptick from here. But so would be interest rates. Do you think that could somewhere dampen the sentiment and perhaps put a spanner in the works for this demand-supply situation that we're seeing build in within realty?
You see, we are definitely concerned about the rise in the interest rates, which could possibly have some kind of an impact on the real estate demand. But on the other side, you see, we are seeing a lot of disposable income also going up in the hands of our buyers, especially in the IT, ITS industry. There's been a favorable increase in the pay of all the people in that involved in the industry, apart from the banking, finance, and the services industry. So personally, both the things look to be balanced. And once this conflict of Ukraine, Russia probably goes down, or the inflation under control, I think the Central Bank of India, RBI, would definitely look at kind of taming the interest rates. And even with the rise of 40 bips, we have not seen a very big impact on housing loan rates yet. So, and that is a focus area of all the financial institutions to lend. They are very favorable in lending to customers for housing. And a part of this also falls under the priority sector. So I think if the banks hold on to the rates to a large extent, and with the disposable income going up, there could be a very small impact, but I don't see a major impact happening in sales.
Ramesh, I ask this because, you know, markets like Bangalore, Hyderabad, NCR, I mean, these are nowhere comparable to realty prices in Mumbai for sure, and are also price-sensitive markets, right? So the interest rates moving up would have a bearing, I'm guessing, on the housing demand.
I think Harshji rightly put it. As yet, we haven't seen too many banks increase home loan rates. That 40 bips increase, if you calculate it to a person's EMI per month, if he's taken a 15-year loan, his EMI is going to go up by around 2.5%, 3%. The overall amount is going to go up by that much. There will definitely be pressure on banks to increase interest rates on home loans, and we feel that it would lead to some level of impact. But we should remember that compared to 2-3 years back, the interest rates are much lower. So even a marginal increase is not going to have any major impact, but there would definitely be some level of impact.
Okay, gentlemen, let's leave it at that. You know, we have seen, for example, worldwide record cash that is being held when it comes to the equity markets. And when that does happen, we do see money going into the property market as well. So interesting times ahead for us. Asset price inflation for properties, they're going to get more costlier, but let's see if demand can be destroyed as well because of the underlying inflation and cost of funds going up. Many thanks for joining us live today.